Hello again, and welcome to another episode of the Uranium Market Minute. My name is Justin Hune. I'm your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much again for tuning in. Another very exciting day in the world of uranium, and can it be any other way? Before we get into it, I'm just going to say that nothing in this video is intended to be investing advice. I am not your financial advisor, and this is not financial advice. Always do your own due diligence when it comes to investing, and always take responsibility for your own choices. With that said, let's just jump right into it. The daily scoreboard here, we're going to talk about the spot price of uranium and the flows into SPUT and the ETFs. So the spot price of uranium today up a couple of bucks here, $39.50 a pound mid-market. Opened the day down at 37.75, or I should say it closed yesterday. So we're seeing some good volume come in and some nice price action here. Highly likely that Sprott is back in the market today, as yesterday was a Thanksgiving holiday in Canada. Then they ended the day Friday, closed out at a 6.2 premium to NAV. So they started today out at that premium to NAV. So most likely, we're seeing some chunky volume here in this vehicle. I would not be surprised to see them raise north of $30 or $40 million today and purchase a good chunk of uranium on the spot market. And I feel that's probably why the spot price is moving up today, because they're in there buying. They ended the day on Friday with 7.9 million in cash. So they likely added substantially to that today. We're going to talk about the flywheel effect here as we discuss the ETFs. So I've mentioned this a number of times, and this is something we repeat in each monthly newsletter with our members, is that the ETFs act as a flywheel in the sector. The flows coming into these funds cause these funds to purchase their underlying holdings. They issue shares in the market, raise cash, and add to their sector holdings. And that's probably what's happening today. When we look over the charts, we're going to see big volumes in the ETFs, and all of their underlying holdings are moving up substantially today. And that obviously works in both directions. When there's a retraction in share count and they have to sell down their equities holdings, that happens on the downside. And on the upside, though, it's just, the valuations of these equities is not really the story here. And the story is all about fund flow. And when funds flow into the ETFs, the entire sector moves. As most of the sector now, most equities, with maybe a half dozen exceptions, maybe a dozen at the most in the entire space, are too small or have too little liquidity to be allocated into these ETFs. So when the funds flow into them, we'll see the whole sector move. And some of the small caps can move, even though their percentage holding in the ETFs is smaller, the float is smaller and the market caps are smaller. So a smaller amount of purchasing from the ETFs will move these stocks much more. This morning, URA reported 450,000 share increase in their outstanding shares. URNM reported 100,000 shares. So that means combined, that's 15.5 million in mandated buying. So that some of that happened yesterday, and a lot of that is happening today, as we can see. So in the month of October, month to date, 26.4 million in new money into URA, 48.1 million in new money into URNM. Starting to see some substantial flow of funds here into these puppies. So let's take a look at the charts. Starting off with URA, as mentioned in yesterday's market minute, we had this tight consolidation, this channel for the past 2.5 weeks or so, really tight price range. And these will always break out. And most of the time, the odds are they break out in the direction of the overall trend. So the direction of the overall trend is what? It's up, clearly, for the past couple of years at this point. These long-term 200-day, 50-day moving averages are moving up, and the trend, therefore, overall is up. And what do we have today? A big, big breakout. I mean, look at the size of that candle. That is absolutely unbelievable. Look at the volume. Today is the largest trading volume for this ETF in its history. Keep that in mind, folks. This is exactly what we have been watching for, right? We've been watching for this downtrend line in volume to reverse, and we've been watching for this big candle to the upside on volume. So we've seen a couple of outlying days with where the volume kind of broke through that uptrend or through that downtrend and that decrease in volume. But here is a clear breakout on volume. MACD looks like we're going to see a golden cross that is ready to roll. This looks incredibly positive, everybody, and this is exactly what we've been positioning for. Let's take a look at URNM. Absolutely gorgeous. Not quite the record volumes we're seeing as in URA. Keep in mind, URA is the more liquid vehicle between the two. Therefore, it's more likely that we will see larger amounts of funds flow into that, and the trading volume is going to be higher. And the reason for that is that large institutions, when they're attempting to position in an equity or in a sector, they require more than anything liquidity. And so the most liquid vehicle in the entire uranium space is the URA ETF. And so we're seeing that big breakout on big volume. That's a positive sign, everybody. Let's take a look at the Sprott Physical Uranium Trust. Another really big volume day, nice reversal hammer right off that 50-day moving average. Just beautiful. Again, we're seeing that overall downtrend in volume break to the upside. This is really good looking here, folks. And I guarantee you that Sprott is raising a lot of cash today, this volume. So they're willing to be 50 to 60% of the daily trading volume on any given day, assuming that they're greater than a 1% premium to NAV. And so, if we see 12 million shares traded in a single day, they have the ability to issue 6 or 7 million shares into the open market via that ATM and raise a lot of cash. And I think that's exactly what we're seeing today. Let's take a look at a couple of the large caps. Oh, just absolutely beautiful. Big, again, look at the volume, declining volume on that sell-off. That's what we want to see in the sell-offs. We want to see volume decreasing. What that means is the sellers are not motivated. They're just getting out, they're taking profits, they're kind of following the trend. Then again, volume breaks out, huge, big daily candle, just absolutely gorgeous. Next gen, same thing. All right, so it's official, guys. We reversed. Look at the indicators on next gen. Absolutely perfect reversal, golden cross there, right off the 50-day, bounce off the 50-day multiple times in the last couple of weeks. Big breakout to the upside, big volume. It's exactly what we want to see here. So today I'm actually going to skip the mailbag and just mention that we'll be having our third members only webinar coming up next week. So if you're a Uranium Insider Pro member, you'll be able to join that live webinar. That's going to be on Tuesday, the 19th at 11:30 a.m. Eastern time. If you're not already a member and you want to subscribe, or if you're interested in getting a sample newsletter, send us an email, support@uraniuminsider.com. We'll send you a previous month's newsletter. You can get an idea of our content. But these webinars have been really fun. This is the third one we've done. We started doing them in August. And myself and kind of my right-hand man on my team, Richard, and we're also going to have guest speaker, John Champaglia, the CEO of Sprott. He's going to join us and do a short presentation at the beginning of the webinar, followed by some Q&A from us and from our members. So that should be really fun. And we get to really get into the weeds. We get to talk in depth about the companies that we are recommending that we own. And we go into all of the nitty-gritty details in the sector that's far more in depth than I can do on these short podcasts or even in the written newsletters, as we can really dive in. These have been a big value add for our members. And so if you're interested, go ahead and send us an email. We'll send you a sample newsletter, answer any questions you might have about our service. That is coming next Tuesday. And there's some interesting stuff that we're going to have to ask Mr. Chimpaglia with regards to their OTC ticker, timing on when that's going to be coming back online. Have they filed for the New York Stock Exchange listing yet? Timeline for that. Any thoughts? He's actually can see what's going on in the background in terms of Sprott being in the market purchasing, who's selling uranium to them, what the market is looking like, how thin is it, etc. So we're excited to have him as a guest on our members webinar this coming Tuesday, a week from today, the 19th. And I'll leave it at that. It's great to see this price action, folks. We really like the overall trend is up. Okay. And so until something fundamentally changes, or until the charts are really breaking down, these sell-offs on declining volume, if we go up, let's say 50%, 60%, 70% on a good run that takes a few weeks, maybe a few months, maybe we'll even see 100% returns in a month or two. And then we pull back 25, 30%. That's just a bull market. That's a resource bull market. And there's absolutely no reason to question the thesis if everything is holding up. I mean, obviously you want to question the thesis all the time, right? But the selling shouldn't cause you to question it. The selling, you need to look at those indicators in the market. What are the outflows from the ETFs? Are there even outflows of the ETFs? That whole previous 3 weeks of selling, the outflows were minimal in the ETF. So that was telling us that the sellers were not really all that motivated. The selling was in declining volume. It wasn't like institutions were bailing out of this trade. And those are things that you need to look for. It's just profit taking, and trade around it if you want. The way that we operate is we're kind of buy and hold, and we add on weakness until and unless it's time to start trimming positions, and we haven't reached that point yet. So great to see the sector confirm what we've been saying for the past few weeks in this podcast, and what we've said week over week in our watch list to our members, and in our monthly newsletter that just went out 10 days ago. So keep the faith. Everything looks really strong, really beautiful. Great to see these good moves. And, that's how this sector works. You can be consolidate and chop around for a couple of weeks, up 5%, down 5%. And all of a sudden you have a 15% up day. I mean, you can have a reasonable return for a portfolio for an entire year in a single day. I mean, and that's why we're in this, because that volatility that hurts on the downside is just unbelievable on the upside. And you can see the way these things move, just crazy stuff. So thank you so much for listening, and really appreciate you guys. I know I said I wouldn't be here today, but my plans got canceled. So obviously recording one today. I'll be here the next couple of days. The end of the week will be a 3-day weekend for me, so I won't see you on Friday. But cheers. We'll see you tomorrow. Be well.